Dumela. Let me just do question 3, which is the cash flow statement, 48 marks. This was poorly answered in the final exam last year, and I don't know why. It says that we have Fullerton Fresh Limited. It is a South African listed company with an authorized share capital of 10 million shares. They produce, package, and supply major retail outlets with fresh produce. They gave us an extract from the statement of comprehensive income or the income statement for the year ended 28th of February 2023. We are given sales. I don't know if I'm going to use sales, cost of sales. I don't know if I will need them. Depreciation is a question mark. Interest is a question mark. But they gave us our net income. I mean, our income tax. Sorry for that. They gave us our income tax, which is 30%. That means that 2,946,000 is the profit. And when you look at most tests or exams set by Andrew, who is the examiner for paper one, Druza, um, they're pretty much similar, guys. They're pretty much similar. He just changes things there and there. Because immediately when I did this paper, I thought of the 2023 exam paper. They are pretty much the same. Um, It simply means that a lot of people that fail to get distinctions in accounting, they just don't do past papers. Anyway, here we are given ordinary share capital. I don't know if I'll need that. Retained income, you have question mark for both. Fixed assets at carrying value. This is the same as last year's one. I'm guessing they will want us to calculate depreciation using that. We have loan from Moyo Bank. I wonder if it is capitalized or not. Whether capitalized or not, I see that they took an additional loan because last year's loan is less than this year's loan. So they took a loan. Cash and cash equivalent, it's a question mark for this year. They gave us debtors control, accrued income. Know that if we are required to calculate changes in trade and other receivables, we'll add debtors control with accrued income. And accrued expense, obviously that one will go to, especially the fact that this accrued expense, they didn't say interest on loan. Now it tells me that that loan from Royal Bank is actually not, it's actually capitalized. It is actually capitalized. That's what it simply tells me. But hey, let me just read there. And then they say sales income tax. For last year, it was 38,000. Credit means it was in trade and other payables. And for this year, it's 32,000. It's credit, it's also in trade and other payables. So last year's one, if we are asked to calculate income tax paid, last year's one will show it with brackets. This year's one will show it without brackets because that 32,000 will only be paid next year. And then shareholders for dividends. If we were to calculate dividends paid, that 487,500 will show it with brackets because it is what we owed last year. And there's nothing else I can take from this side, right? I don't think there's anything else I can take from that side. And then they gave us additional information. Fixed assets. They say during the year the company purchased new equipment for 1,500,000 less 10% trade discount. So the cost of that equipment will be 1,500,000 times 90%. And they told you that a company sold an old equipment that it's carrying value, which is 99,000. There's nothing here that talks about depreciation. So I'm guessing that I'll have to replicate note number 3, which is your tangible assets note, and manipulate to calculate depreciation. And then we've got the loan and interest. They said the loan from Royal Bank is the only non-current liability the company has. Interest on the loan is capitalized. I told you that. A new loan for 13 million was taken out during the year. An amount of 5,800,000 was paid to Moyo Bank as the repayment, as well as the interest on the loan. Then they gave us an appropriation of profits. And for that one, they say an amount of 5 million 602,500 was retained after tax and dividends for the year. So that is retained income. That amount will be taken from your appropriation account to retain income. I don't know if I missed anything with that one. With the other one, we just have to manipulate that to calculate the interest. Okay, you have to do the table for calculating interest, the loan table, the one opening plus its opening balance, and then you put additions of the additional loan, and then you put repayments, and then its interest in brackets, and then you'll have balance at the end of the year. And then you have to work backwards to calculate the interest. That is for the one with the loan. This one here, well, I don't know what to do at the moment because I can't really use that appropriation of profit. But what I know is that they took the net profit after tax, which we can easily calculate because we were given income tax, which was 30%. You just have to multiply that by 100 and divide it by 30. You get, actually, you multiply it by, yes, you multiply it by 100, you divide it by 30, which will give you a profit before tax. And then you subtract your income tax for the year, which was given to you. The only thing that is missing here is dividends, which is this year's interim plus final. We do have this year's final, but we don't have interim. And without those interim dividends, we can't even calculate dividends paid. Check my videos on the cash flow statement, guys. I explained that thoroughly. Let's move to the next one, though. The next one says we have shareholders' equity. So this is where I was expecting to be given retained income. I don't know even why I need retained income here. They say that the company sold and repurchased shares throughout the year. Okay. Debt to equity was 0.48 is to 1 as at. I remember doing something like this though. As at the 28th of February 2023. Oh, this is similar to the acid test ratio that I did in question 2. I thought as much. Interesting. I don't think you are supposed to have asked this twice because he already asked a ratio where you needed to manipulate. And if student couldn't answer that, they don't know about ratios, they couldn't answer this one as well. I would have done this one differently though. I could have used the one with fractions instead of repeating ratios. So I could have just used what the one that has shareholders is return on shareholders equity. Could have used that instead of the ratio, because then you're penalizing students twice and for the same thing in essence. But anyway, let me move on. They say cash movements. We have cash generated by financing activities, which is 36,471,000. And then cash utilized in investing activities, which is 1,401,000. Okay, now let's go, Teresa. So let's hear what he says here. He says, refer to the information relating to Fullerton Fresh Limited. Okay, we need to calculate the following figures for note 1 and those relating to operating activities. So we're giving here depreciation. That's what they want us to calculate. This one, guys, is quite easy. And I spoke about it. I spoke about it earlier on. So you're going to take this, right? And then you add additions, cost, right? But I said this 1.5 must be at 90% because we're provided with 10% trade discount. The cost price of the product will be net of discount, trade discount. So you need to multiply it by 90%. You will get the cost. And then you subtract equipment at carrying value. It must be at carrying value. Carrying value is the same as the book value. And then guys, you manipulate. Guys, yes, man, let's choose grade 12. Man, guys, this was just a giveaway. Okay, but anyway, it's fine. It's fine. It's fine. So I'll start with the balance at the beginning of the year, which is 6,950,000, and then additions, as I said, you will multiply it by 90%. And that'll give you 1,350,000. And then you've got disposals at carrying value, which was given to you. Then you need to calculate that. And then you'll have depreciation, which is a question mark, is what you don't have. And then you'll have balance at the end of the year. Balance at the end of the year is this one, guys. It's this one here. You see, 7,216,000. Very easy. Um, you guys. Anyway, you're gonna have 7,216,000. And as I've said, you just have to work backwards. And when you work backwards, you will add that one and then subtract this one and then subtract that one. So you basically add what you subtracted what you added. So you will take the 7 million, add the 99,000, subtract the 1,350,000, subtract the 6,950,000, and then it'll give you a depreciation value, which is just like that, 5 marks gone. Guys. Anyway, anyway, um, interest on loan. So with that one, you will go to the interest. You pretty much work it out just like your depreciation. Um, okay, this is another repetition. Drizza could have used the probably the not capitalized because now it's pretty much you're calculating interest just the same way you calculated fixed assets. So we've got 20,100,000. I will start with that. All right. So that will be the balance at the beginning of the year. So that's what I will start with. Balance at the beginning of the year will be that 20,100,000. And then I will add any additional loan that we took. We definitely took an additional loan because this year's loan is more than last year's loan. So we definitely took a an additional loan. And the new loan that we took here was this 13 million rand worth of loan was taken out during the year. We read this already, guys. And then I'm going to subtract these repayments, right? So I'm going to put in additional loan and then subtract the repayments. And then I will get I'm supposed to have interest, but it's not given. So it's the same as depreciation. That's what I meant, guys. Exactly the same. And then you'll have balance at the end of the year. And balance at the end of the year, which is the one that I said is bigger than last year's one, which is this 29,700,000. That's what you will have. And then you just have to manipulate just like I did in the previous question. You will take that 29,700,000, add, so you will take this, subtract that, add that because it was subtracted, and then subtract that. It'll give you your interest, which is 2,400,000, which is equivalent to your interest paid, right? I don't know what they said about these repayments. Did they say they include interest? which is 5 million. Here I'm just going overboard, guys. Was paid tomorrow as repayment as well as interest. So since that 5 million includes interest, which is the 2.4 million, so that 2.4 million, you will put it under operating activities as interest paid. But then you will take 5.8 million, which is 5,800,000, and then you minus the 2.4 million, then you're left with a capital portion of the loan. That capital portion of the loan, you will normally put it under financing activities or as repayment of the loan. And then that's it, guys. That's it. Okay, that's it. Well, I'm gonna see someone now for extra lessons in like 8 minutes. Okay, so I still have some 8 minutes. Let me see if I can be able to finish this. Just remember, if you need additional or extra lessons, just let me know. Just send me an email address or just WhatsApp me. All right. Details are in the description and we can take it from there. So far, I've got a couple of students that got to know me through YouTube. Yeah, and most of them are from Joburg North, Pretoria. Shout out to Pretoria though for the support. Um, thank you, thank you, thank you so much. Okay, so I provide extra lessons for 250 per hour. So if you need any extra help, you're rewriting this year, or you need to get that distinction, just let me know. We will have them on Zoom. And yeah, pretty much the same as I am teaching right now, just that you get to ask questions, you get to stop me when you don't understand. All right, I spoke about this earlier on, guys. SARS income tax from the previous year, you're going to show that in brackets. Okay. Yay. Now, income tax was given to us. I also read about that. It was given to us in the extract from the income statement. There it is over there, which is 2,946,000. But I said even SARS for this year is it was in trade and other payables. If it shows credit, it means it's in trade and other payables. And guys, please, please don't be scared to think credit means that it's a credit balance. It'll be a credit balance if we did not pay SARS enough. We did not make enough provisional tax payments. So now we end up owing SARS. That's why it shows credit. It means we owe SARS. Okay. That 32,000, guys, it'll be paid next year. So we will only show it with brackets next year. This year, we're just saving money because we're not paying for it. Okay. Look at it that way. So I will just add back that 32,000, subtract that 2 million. It was 2 million what? 2 million 400 and, oh, 2,946,000. And then you add back the SARS income tax for this year. It'll give you income tax paid. Just like that, guys. Easy, eh? Then they ask the appropriation. Appropriation account is quite easy because on the credit side of this appropriation account, you'll have profit or loss. I normally teach this in grade 11, thoroughly in grade 11. And it should be done in grade 11 because once you understand it in grade 11, then when you get to grade 12 and you're dealing with shares and dividends, it becomes very, very easy. So what are we going to do here? I'm going to start with my profit, which is my profit before tax. But I don't have it. I only have income tax. So I'm just going to take that income tax, times it by 100, divided by 30. It'll give me my profit before tax. And then you subtract your income tax, which was given to us. It was 2,946,000. And then you will subtract your dividends on ordinary shares. When you read the whole thing, we don't have interim dividends, so we can't calculate dividends on ordinary shares. We do have this year's final, but for us to calculate dividends on ordinary shares, it must be the sum of this year's interim plus this year's final. And then you will have the balancing figure, which you will take to retain income, which is what they gave us, though. This was a very nice question, actually. So all you had to do was just to balance this off by taking the bigger side and put it in both sides. And then in the smaller side, you'll note that you're missing. That missing figure is your dividends on ordinary shares, which will be 1,271,000 500. How did I get that? I took the 9,820,000. I subtracted this 5 million. Okay, I don't know what happened there. 5,602,000. I also subtracted that 2,946,000. That's how I got it. Done. Just like that. And then they asked this. Obviously, with this one, guys, it depends on what you did with earlier questions. Profit before tax, you just have to take that 2 million. It was 2,946. You times it by, we just calculated it now actually. We times it by 100 divided by 30. This we calculated. That we calculated. You add depreciation and your interest, it gives you adjustments for, and then you add your adjustment for with that 9,820,000, it'll give you operating profit before changes in working capital, which is 13,205,000. When it comes to inventory, I don't remember reading anything about this here. They just said here, oh, I left it out. Cash movements, cash generated by financing, but that's not helping me. Cash utilized in investing activities, that's not helping me as well. Okay. Do they give us anything about inventory here? I don't see anything about inventory. So for now, I'll just leave it out. Okay. You don't stress, you move on. Okay. I will double check later on if it was given to us. But I'm just gonna move on to the next one. And the next one here will be with respect to trade and other receivables. Okay. With respect to trade and other receivables, what I will do is I will go back to the list of balances that I have given. So I will only look at this two, trade and other receivables. I'll look at debtors control as well as accrued income. In few more slides before I can continue with my trading our receivables. Because we are not given anything about inventory here. And so they didn't even give us any ratio to enable us to calculate the inventory. Okay, let me see. It's 3.1, 3.2 appropriation. Okay. And oh, this is what I'm missing here. Okay, so they say inventories decreased by 78,000. You will know that a decrease in inventory is a cash inflow. So we will just write it without brackets. Okay. What else did they say? I saw something about trade and other payables there. And what do they say about trade and other payables? The movement of trade and other payables resulted in an inflow of cash of 9,580,000. I wonder why they gave it to you like this. I feel like this is where they were supposed to challenge you a little bit. But anyway, I'm not complaining. If you're writing matric last year, you must have celebrated. Okay. So you'll show that without brackets because they told you it's a cash inflow, which is just an increase, by the way. It'll be a cash inflow if it's an increase. Probably, hopefully, they marked the increase just to make sure that they catch you out there. And obviously, we'll be left with that trade in our receivables. So I will just add these up, and this will give me these totals here. For last year, it will be 31,285,000. For this year, it's 43,860,000. So your trade and other receivables went up. It means that your debtors are owing you more. And when your debtors owe you more, it means that you lost money. That is a cash outflow. Please check the videos I've made on cash flow. I've explained that thoroughly. It's a cash outflow. And that is because you basically either gave your debtors stock that you paid for, but they didn't give you money. So you lost money because of that. So yeah, that's it. That's it. All right. So an increase in trade and other receivables results in a cash outflow. A decrease results in a cash inflow, as it means that your debtors are paying you back. Okay. And you had to show the workings here. give you 12,575,000 in brackets. Then you're going to take the 78,000. It's positive, right? So you take it as positive as it is. So it'll be 78,000. Then you subtract 12,575,000. Then you add 9,580,000. Then it'll give you 2,917,000, and it's negative, so you will put it in brackets, all right, because it's negative. Then you're going to take 13,205,000 minus the 2,917,000. It will give you 10,280,000. Yeah, guys, that was last year's paper. I felt like Driza gave it to you. Yeah, just like that. Done. Okay, let's move on. The next one they wanted us to calculate is cash generated from operations. Already, guys, we have cash generated from operations, in operating activities, but we have cash generated from operation. We just calculated it. Now it's 10,288,000. So that will be a continuous accuracy mark. Income tax paid, we calculated that. I forgot what the value was, but you just put it here. It is 2,952,000. That will be your income tax paid. We calculated it somewhere. I'll show you just now. Calculated with it. There it is, 2,953,000. And the next one will be your interest paid. Your interest paid will be, oh, I see. Actually, those dividends on ordinary shares, you could have easily calculated them, guys. Okay, let me just show you another way. Oh, before I confuse you, let me just calculate interest paid. It was 2.4 million. We calculated it somewhere. And then you're going to take 10,288,000 minus 1,181,500 minus 2,952,000 minus 2,400,000. So that'll give you your cash generated from operations. I was getting excited, guys, because I was saying to you, remember we didn't have interim dividends, and here they gave us our dividends paid. Dividends paid is normally this year's interim plus last year's final. So you will take this 1,181,500. That's an alternative way. And then you could have subtracted your shareholders for dividends for last year. So shareholders for dividends for last year is 487,000. So you would have subtracted that 487,500. It's minus 487,500. It was going to give you your interim dividends. And then to get your dividends for this year, you take your interim dividends, you add them with this year's final, which is 577,500. Okay, 577,500. It was going to give you your dividends for this year, which is 1,271,500 that you could have used to put in here. You see that missing figure? You could have calculated it that way without actually having to manipulate this. Yeah, it's very important sometimes to read, but you will choose which one works for you. Okay, you will choose which one works for you. And then you'll do you, right? Normally say to my kids, you'll do you, boo. Okay, now they want us to calculate retained income balance, which was impossible, by the way. They didn't give us opening balance, and that made it difficult. Okay, they didn't give us opening balance at all, but they gave us debt to equity ratio, which was on the last day of your financial year. If they gave us retained income at the beginning of the year, but they said we sold shares that could have resulted in a loss or profit due to buyback. So it was going to be difficult. We have a lot of unknowns. We have three unknowns. So it was going to be impossible for us to use retained income now to calculate your retained income at the end of the year. So the only option you had was just to use debt to equity ratio, which is your non-current liabilities is to your shareholders' equity. Shareholders' equity, you need to remember, it's basically, which is X here, we didn't have it, all right? But we had non-current liabilities that were given to us. They said we only have one loan. When I read it, they said we have one loan, which was from Moyo. There it is. So there's only one loan. Okay. So the loan from Moya Bank is the only non-current liability for the company. So that the company has. So I would have taken that for this year, it's 29,700,000. And I would have used that. I don't have shareholders' equity, as you can tell, because for me to calculate shareholders' equity, I need ordinary share capital with retained income. But I have ordinary share capital. I don't have retained income. It means that if I find ordinary share capital, I will just subtract that shareholders' ordinary share capital from my shareholders' equity, and it will give me my retained income. Okay, that's what I could have done. We good? That's what I should have done. Okay. Um, yeah, let me continue. So basically, we were given that to equity ratio. You just cross multiply again, and you will get that x times 0.48 will give you 0.48x, and then 1 times 29,700,000 will give you 29,700,000. And then you divide both sides by 0.48, it'll give you 61,875,000, which is your shareholders' equity. So to get your retained income, you will take your shareholders' equity minus your ordinary share capital, and that'll give you 15,375,000. Just like that. Now they want us to calculate cash and cash equivalent, which is the closing balance for 2023. Um, and I think we're going to have to use this information here. You see, they said cash generated by financing was that much, cash utilized in investing. Generated is it's an inflow, we know we show it without brackets. Utilized, it's an outflow. It means we show it with brackets. It's used, utilized, used. It's an outflow, we used it. Okay. And generated, it's generate. So it's coming in power. Okay. In these times of load shedding. I already have cash from operations, which I calculated above. So even if it's wrong, if you put it here, you'll still get a continuous accuracy. Utilize, you show it without brackets. Financing was how much it was. You show it with, actually, utilize, you show it with brackets. Generated, you show it without brackets. These are simply the three main activities when you prepare your cash flow statement. So when you take a cash generated from operating activities, you add it with investing, you add it with financing, it'll give you net cash and cash equivalent, right? And here, because investing is negative, we're going to subtract it. Okay. And then it'll give you a net cash and cash equivalent at the end of the year, which is 38,824,500. Do we have cash and cash equivalent at the beginning of the year? So this is just the cash flow statement, the totals or the headings as we put them from different activities. I'm just going to go back to that list of balances and check if I have cash and cash equivalent. I do for last year, which is 370,000. So I'll just put it here as such. Okay, I'll just put it here as such as 1,370,000. Now, for me to get that 38,824,500, what I would have to do is I will normally take my okay, um, okay, I will normally take my. This is another thing, guys. If you don't want to use you don't want to apply math that much. So let's say our closing balance, we don't know what it was, right? So we'll just say our closing balance is X, okay? If we take our closing balance and we minus that 1,370,000, we are supposed to, you could press alpha and press equal sign. If you're using this calculator, it's AP calculator, are supposed to get 38,824,500, okay? And all I'm going to do now is just say shift and then press solve. It'll give me the value of X. Let's see how much it'll give us as X. It's 4 million and it's 40,194,500. So that's what we are simply missing here. So in essence, guys, what I did, you can just use basic math if you don't mind. You could have just said that this is X, we don't know it. Okay, But I know that if I take that question mark and I minus 1.7, it should give me 38. So when you work backwards, you'll take 38 and then add this, okay? Because you use reverse operation. Normally you minus it, and now you're gonna add it, the two, it should give you cash and cash equivalent at the end of the year. Okay. Or otherwise you can use what I've just used here. You will say X minus 1,370,000, just like I showed you in the calculator. And then you equate this to 38 million 824,500. And then you just solve for x, okay? You just take that 1,370,000 to the right, you add them, and then you get your answer. Yeah. So far, I've done question 1 up to question 3, and I don't see anything that was that challenging. Guys, yeah, what happened? Very teasy. If you were watching this channel from last year, I am sure you nailed this. Okay, it was quite easy. The last question will be the one that we do next, which is question 4. It looks very easy already. Anyway, take a look at it. Take a look at it. Please let your friends know about this channel. We are required to calculate indirect labor, rent expense. I don't know what that is doing there, but anyway, we have raw materials. We have factory overheads. We have cost of production of finished goods. I can already see this guys going through my mind. And then we have this one here. Um, so what do they want there again? They want us to calculate increase. So it's it's new minus old divided by old to calculate the percentage increase. And we've got this one over here. Interesting. All right, guys, I hope you enjoyed that. Thank you for watching the channel. Please don't forget to subscribe. Keep on watching. We are so close. I just need 200 watch hours and then they'll start getting paid. YouTube will start getting, well, pay me. And I appreciate your support, guys. Please keep watching, like all the videos, tell your friends, share it with your friends. And if you need any extra lessons, just let me know. Okay? Holla at me. All right. This is it from me. Enjoy the rest of your Saturday. Hoto.